You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson from WallStreetWindow.com. Welcome to the show, Mike.
Oh, thanks for having me. It's great to talk with you again.
Just before we turned on the microphones, I mentioned I think the stock market right now is kind of a stairway to hell. You take 3 steps down, 1 step up, and then another 3 steps down again.
Well, I do agree. I think that's where we're headed for. I mean, I know we've spoken over the past year about this, about a bear market coming, and that's what happens in a bear market. You go down, and then you bounce, and you don't bounce back up as much as to make back for the losses. But the thing about it, though, is on Friday we did have a big day for the Dow. It went up about 350 points, or more than that. I think it was 390 something there. And that did bring a lot of hope coming into this weekend that we would really just take off and continue going higher. And that hasn't happened yet. And I think that's very important. The thing is, when people listen to a program such as yours, or if they turn on the television set to see one of the financial channels, more often than not, what they'll see is a prediction about the stock market. And most of the time on CNBC, it's really a prediction for further gains to come, really no matter what the market is doing. So when you do have the bad down days and down times, a lot of people will just tune into that to hear something positive to make themselves feel better. And they grasp onto a prediction, and if things don't turn out the way they were expecting, then they get mad at the person on TV for not predicting things correctly. Now, I'm saying I think the market's going to fall. I think we're in a bear market, and someone listening to me say that could think, well, that's just another prediction. And, you know, what use are predictions when so many times they're not right? But, you know, obviously if I predict it's going down, someone's predicting it's going up, only one of us is going to be right. So what I want to do is try to give people something they can use this month to help them make their decisions, and that's the stock market action. You know, we had a big drop in January that bottomed out around the lows of August, and going into, you know, this month we were bouncing. We had the big rally on Friday. Now, if this is really a bottom that's for real, and we're still in a bull market, as some say, well, then the market should trade like that this month. It should continue to go up. The S&P 500 went up to 1950. If you remember back in October, we had a huge, fantastic rally. And also in 2014, in the fall, there was another fantastic rally. And that's what happens in bull markets. You have corrections that are short-lived, and then the market, you know, it's on the highs within the space of a couple weeks. What this means is that if the bullish people are right about the stock market, the market will regain its footing here and go through the high of the other day, go through the 1950 level in the S&P 500, and get back up towards 2,000 or above it before the end of this month. So instead of just saying, well, I'm going to listen to a prediction, you can see this month and test these predictions and see if they're right, because if the bulls are right, the market will act in a bullish manner. However, if instead, you know, the market fails to do that, or let's say we bounce back up a little bit and go in a range, and the S&P just gets to 1950 again, or even 1975 before the month's over, it won't be enough of a rally to really get things going. And the real danger is that if the market tops out at 1950 or 1975 or 1980 even, in February that when it goes back down, it won't successfully retest the lows because it won't have enough space between the high and that low of January. And if those lows are broken, it'll be a total disaster. I do believe it'll be another step leg down, to put it that way, in a bear market. So here we have, something very simple people can keep their eye on and then make changes accordingly. So if the bullish scenario plays out, then they can sleep well at night and not worry if they're fully invested. But if it doesn't, then they'll know they should make changes ahead of a significant decline to come. So I think that's a good way for people to get ready for this month and think about what they want to do instead of just like sit there and say, well, I want it to go up, so here's someone telling me it's going to go up, and I just want to believe it and not think too much. We really got some easy ways to navigate this market, let it guide us instead of just wanting it to do what we want.
Individual Canadians, it appears, have listened to people who said get out of stocks and hold on to your cash. A record amount of Canadian cash is sitting there on the shelf now, waiting for the next good place to go. Should they just hold on to it for a while and wait for that next good place to show up?
Well, in general, yes, I do think so, but there are things that are in a position to go up, and really the best thing at the moment is gold. The metal itself, it's one of the best performing things, period, in all the financial markets. I mean, it's performing better than bonds. It's performing better than, I think, any stock market in the world right now. So I think that's the thing people should put some money into. And the thing about gold is we came into this year in the United States being told that the Federal Reserve was going to raise rates 4 times. And this was going to supposedly be very bullish for the dollar and this and that. And now it's pretty clear that scenario is not going to play out. Further stock market declines will make it so the Fed won't raise rates at all. So that's going to be negative for the U.S. dollar and a positive for gold. And gold is acting like it wants to go up anyway. We're now hitting the 200-day moving average for the price of gold itself. So, yeah, I think having some cash is a really good thing to do, and think that you can buy stocks at a cheaper price in the future or whatever you may want to buy. But it doesn't mean you have to be 100% in cash. And gold is something I think people can get into. And also, I'm frankly betting against stocks that I think are junk and are performing worse than even the stock market is. They tend to hit really hard when the market falls and not really bounce that much when it does bounce. So there's money to be made on the downside in the stock market too. It's just, someone's just going to hold and the market declines. They're 100% invested. That's a sad story, and that's the kind of story that can lead to an ending where you're basically wiped out. And that's not what people need to get caught up in. If we really decline, if we break those lows, it's going to be really a bad situation.
Some people are asking, is this a good time to start buying oil stocks because they believe perhaps the oil market has hit its bottom?
No, and the 2 reasons why. First of all, the oil companies themselves have only just now started to downgrade their earnings expectations. And one example of that is BP did that today, and it's fallen 8%. And I think this is just the start of these oil companies finally doing this and downgrading their earnings estimates and even cutting dividends. And that's a process that can take 6 months typically in such a cycle. But the other aspect of this is the price of oil itself. If you can recall, back in the summer of 2014, there had been built up in the oil futures market the largest short position ever among large commercial operators. These are people that use oil to hedge real businesses. I'm talking oil shipping companies or oil producers. And they had the largest oil short position ever. And then, of course, oil started down in that fall. So they got ahead of the curve there. And we pretty much know, it's not really a secret, it's in the stories about it in the media, that Saudi Arabia was one of the biggest shorters there and was positioned for such a drop. And part of the reason they're doing that was to target the American shale oil industry to destroy it, so they can recapture that market share. And that's the process that's going on. They haven't completed that process. A lot of these shale companies, they're not bankrupt yet, and they're just sitting there, they're just barely trying to survive. So until that completely goes under, the Saudis probably aren't going to really want oil to go back up. And more concrete than this is this oil short position is only half what it was in 2014. To me, that means we're halfway from a new oil bull market. That doesn't mean oil is going to go down for another year and a half, but I don't think it's going to go up in any sustainable way this year, probably not till next year. So I think it's too early for the oil game. But there are other sectors that are doing okay in the stock market. Utilities are doing okay right now, and they tend to act as a defensive play. But the mining stocks, I think, are worth, the gold and silver mining stocks, I think are worth keeping an eye on and putting some money into also, because oil gold, goes up, so they will benefit too. They may get taken down over the next couple weeks or a month or two if the U.S. stock market breaks those lows of August, which frankly I think is going to happen. There may be a short period of time in which the mining stocks are held down by widespread selling of stocks in general, but I think after that they'll come out and do really well for the rest of the year and the years to follow. So there's stuff out there. You just got to really accept the fact that it's just a few little slithers of the financial markets, and most of the market is now really becoming dangerous and toxic in really a way just to lose money.
If you're going to invest in gold stocks or gold miners, should you be very aware of geopolitical risk?
Well, I don't think you really can do much about it, and then it's really difficult to predict the outbreak of the next geopolitical event to come. However, at the same time, I've never seen a geopolitical event that had a permanent effect on the financial markets, any financial market, for that matter. They tend to just have an impact for a couple of days or a week or two. So I really wouldn't worry about it. There's a financial, geopolitical event that bad, and Lord, we'd really be in trouble. We wouldn't be worried about the markets anymore.
Natural gas, the prices for natural gas are unbelievably low. Is natural gas in a position to increase in price?
Yeah, now that's something that does look like it's ready to have a really nice run. Thanks for actually pointing that out. The thing with natural gas is it's in the opposite position that oil was in 2014. There's actually a huge commercial long position in natural gas. And there was a nice surge in natural gas prices just a couple weeks ago, and it's now pausing. And it looks like if it can break out of the recent high of January, that you get another really nice surge. And actually, historically, natural gas prices tend to do that. They tend to have a big surge up and then come back down at least once every year. They didn't do that really last year or the year before, which is a rarity in their history. So I think there's a really good chance that could happen. And we get another cold front come into the United States, and it'll probably definitely happen.
If you're going to bet on any one area to show improvement this year, could you find one besides natural gas, perhaps?
Well, really, if someone if someone said you've got X amount of money, you've got to put this to work tomorrow, I would be buying gold with it, actually. The natural gas stuff is fun to play, but it's so volatile, it can be risky. Well, gold isn't quite as volatile as natural gas, so it's something I would put a little bit of money into, but I certainly wouldn't put every penny I had into natural gas.
Any thoughts on real estate right now?
Well, that's a good question. I'm really not sure. I've got mixed feelings about real estate. On one hand, I think the stock market's going to fall and it's going to hurt the economy or slow it down. But then on the other hand, as a result of that, you look at the Treasury bonds today; they're going up. It looks like the United States Treasury bonds are going to retest their highs of last year, which would mean that the rates for government debt for the U.S. are going to fall, which that should help mortgage rates go down a little bit too, or stay low at least. So, yeah, I mean, I think real estate. Well, let me put it to you this way. Actually, this might be the way to think about real estate. I think it's a good opportunity to buy real estate as an investment. Because the rates are so low, your cost of financing is low. It probably may go a little bit lower this year. However, I don't think real estate's a good thing if you get the mentality you're going to try to flip a house or do those kind of things. So I think it's a good long-term investment here, but one that you don't expect to, get rich off of. If you can buy something that's a rental property or you just want to buy your own home, those are good things to do, but the days of flipping stuff, I think, are long gone. And real estate can also be a good inflation play. We don't have inflation now. We've really got the opposite, but as a result, eventually, of a stock market decline and the Fed having to one day do a 360-degree turn on what their policies are, 180 degrees, it will eventually bring inflation, even if we get about slow economy, and the oil prices, of course, are a sign of deflation and so forth. But this could all boomerang in a year or two, and that would make owning a home, or real estate investments a good store of value.
Well, of course, Vancouver has just been declared the third least affordable city in the world, behind Sydney, Australia, and Hong Kong. And we just had a big story on the news, a shack, really, a rundown shack listed at $2.4 million.
Wow, that sounds like a bubble going on there. That sounds a little scary to get involved in that.
Well, people are wondering, will the exodus of money from China continue? And they look at Vancouver as relatively safe, at least a stable government. On the other hand, will they keep their money on hand in China just to survive? Two different points of view there.
Yeah. No, that's a good question. In China, it's kind of like a black box. No one knows for sure exactly what's going on over there. I was listening a couple weeks ago to a professor at Johns Hopkins University who's from China, a Chinese gentleman, an economist, and he was claiming that the country is so broke that they created a stock market bubble last year on purpose just to be able to sell stock and finance the debts of their banks and companies that are all caught up in that real estate bubble of China and the empty cities you can look up on the internet, and just this overall craziness. So, I mean, that's really crazy. It's all in the news, the Chinese stock market's falling, but, I didn't really think of it like they did this on purpose, but maybe they did. If you talk to people that travel over there, each person seems to have their own unique story. They can talk about the smog of one of the big cities, but then they go in the interior, and it's a whole different world. And I've heard stories of mass strikes going on at some of the factories, and even someone I know is touring a factory, and they were told by someone that some of the factories are shutting down and moving to Vietnam in order to escape strikes. So it'd be neat to really read something where someone really toured the country and can report back what's really happening there.
And of course, the media in China is so tightly controlled. We think the media in North America is controlled by the big corporations. Well, in China, it's all filtered through the government first.
Oh, yeah, and so is their internet. I mean, you can't, they won't let you surf certain websites in China, and then all the news sites are controlled too. If you're a reporter and you report something that's not approved or something they don't like, they'll remove it and give you, you'll get in trouble.
You'll be assigned permanently to Ding Dang Dong City Hall.
Yeah, I don't know what happens to them. I wouldn't want to find out, you know.
Well, they've just announced they discovered a Ponzi scheme worth over $7 billion, 21 arrested. But in China, I wonder, are these just the scapegoats? Yeah,
well, I mean, when the stock market was falling, they were doing strange things, arresting people, and they made it so you couldn't sell stocks. They did a freeze if you're a large shareholder in some of these stocks, you weren't even allowed to sell them. They did that in the summer, and then the day they reactivated the ability to sell, the market dumped like 7% or something. So it's crazy. What's funny about it, though, is their market was so much in the news at the beginning of the year, and it's kind of disappeared from the news, even though it's still falling.
I consider the Shanghai market the Hotel California of equities. You can check in, but you can never leave.
Yeah, well, you know, the thing about it is in 2009, I actually was buying China stocks. They were trading in the United States on the American Stock Exchange and the NASDAQ. And these stocks back then were red hot for a couple months. They're going from like $1 to $20 and so forth. It was one of these, fads that happened in the financial markets. And I was buying a couple of these things, and the analysts all had buys on them, and you go look at the valuations look good. They're going to have all these great earnings, and it turned out that these things were just making it all up. There's just frauds, and they'd let them trade in the U.S. and didn't stop them or anything. And I got tricked, by them. I mean, I didn't lose a whole lot of money, but I learned my lesson about just thinking, well, just because it's on the United States Stock Exchange, they won't let a fraud like that happen. But, they can only stop so many of them. And if that's what they're doing on our market with their Chinese stocks, there's no telling what the stocks on their market are like. It must be really crazy.
Mike, thanks a lot for chatting with us.
Thank you. It's great to talk with you as always.
My guest has been Mike Swanson from WallStreetWindow.com. You're listening to HowStreet.com Radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.